The markets are at a pivotal point heading into the new year, and what I have to share on the Mag 7 alone tells us that SPY and QQQ are either about to have a blow-off top or a major correction of roughly 12 to 13%. We're going over chart analysis and profit targets on SPY, QQQ, the Mag 7, and other tickers. So if that sounds like something you're interested in, stick around because we're diving in. Nothing I'm about to share is financial advice, so please seek out a licensed financial advisor before making any financial decisions. Welcome back, Cool Cats. The markets are still very top-heavy with decreasing breadth, so we're going to dive into the Mag 7 to kind of see where the market might be headed. So we're kicking things off with NVIDIA. If you notice right here, this is on the 4-hour time frame. NVIDIA is currently in a descending channel, and we just recently hit the top and rejected off of that. So could NVIDIA bounce off of this minor support level here if it got back above that minor resistance level? Yes, it could push back up, but currently NVIDIA is under this resistance and has much more of a likelihood to continue further down to hit this main support line. If it hit it, it would hit somewhere around like 129 to 130, and the upper resistance right now is around 140 to 141. Now, I shared this before on the weekly time frame. We have this RSI pattern on the weekly time frame that kind of looks like a falling wedge. So there is the potential that if this is how this breaks out, this could actually indicate that NVIDIA is going to break out to the upside in a pretty major way. But I'm also keeping in mind this massive rising wedge pattern that has been forming for multiple years, going all the way back to 2021. If this rising wedge pattern plays out, this is on log scale. This was indicating that if this breaks this major support line here, we could actually see NVIDIA fall at least to somewhere around $84 to $85 a share. And there is a gap that goes all the way back to May 2nd that would be filled if that fell that far. You know, looking back on the weekly though, I think the most important thing, and I've said this before, the most important thing to note is this extreme bearish divergence on the weekly time frame. Could it mean that the RSI is just resetting to push higher? It could, but so far we've broken through multiple support levels, and this green line right here is the support level of last resort. Now that said, if this symmetrical triangle that we charted before in purple actually plays out, it's still targeting an NVIDIA of around $169, let's say $170 a share. But NVIDIA would absolutely have to get back above all of these major resistance lines, especially around 160. This main resistance line in red is the main one. It would absolutely have to break above and flip into support. And looking into the 4-hour time frame, one thing I find very interesting is if you look at the resistance line of this descending channel and it's converging with this main long-running support line, they're converging around this January 10th date, which just so happens to be the non-farm payrolls. And a trading friend of mine recently also shared how Janet Yellen is saying that by the 14th, there's a potential that our government is already going to hit the debt ceiling again. All right, we're moving on to Meta. And I want you to keep in mind that out of all the patterns and pattern targets that I'm sharing, they're really dependent on where they break out from, but the length of the target doesn't change. And on Thinkorswim doesn't adjust things based on like dividends and stock splits and things like that, like some other platforms do. So you have to keep in mind that the prices I'm sharing on here may differ just a little bit from your platform. So I find this pretty interesting. On Meta, we have two nested patterns. We have a bigger symmetrical triangle here in blue that goes all the way back to November 21st. And then we have a nested smaller symmetrical triangle that's within that right now. And wouldn't you know it, if you look at the date where the bigger symmetrical triangle is converging, look, it's converging right around that non-farm payrolls date as well. So the smaller symmetrical triangle, if it breaks out, is targeting just above previous all-time high, right around 642, give or take. Or to the downside, it's targeting around 554. Now the larger triangle though, it's targeting around 680 to the upside, or possibly around strong support around 530 to the downside. And it probably should go without saying that based on how this smaller nested symmetrical triangle breaks out, it's probably going to determine how the bigger one breaks out as well. Switching over to Tesla, we can see we have a symmetrical triangle on there as well. And Tesla is currently above this key level of around 414 to 415. And depending on which way this triangle breaks, it could be targeting about 533 to the upside or about 366 to the downside. And I shared this in a previous video, but I just want to reiterate, I had shared this giant symmetrical triangle pattern on Tesla, and I said that Tesla was very likely going to around 470. Even I was like, that seems kind of crazy, but I want you to look at the contracts. If you had bought them, just how much you could have made. You could have bought these contracts for between $100 to $200 back in October before the main breakout. And if you had bought duration, so these are the March 2025 contracts, if you'd bought enough time and you had held to the pattern target, these things went from about $100 to $200 a piece to over $8,000 a piece. Could you imagine putting $1,000 into something and pulling out 80 grand? That's the power of patterns when they do play out. So if you don't want to miss these market moving patterns that I share on a regular basis, please make sure you subscribe and tap those notifications. And while we're already on the subject, I want to remind everybody, I share all of these market moving updates on the YouTube community tab, on StockTwits, and on X. So if you haven't subscribed, please make sure you do so you don't miss these things. All right, so the last thing you saw there on the community tab was Apple, and this was the setup I shared. I shared that this looked like a 3-point move where each move was getting a little bit less impulsive than the last, and we can see how Apple hit this main resistance line, just briefly had one green day above it, and then closed below it pretty red. And I think it's really important to note that around $263 a share, right around that area, is a key psychological level of a $4 trillion market cap, which could absolutely act as key psychological resistance. And when we zoom into the 4-hour time frame, we can see that we have this fair value gap going back to December 9th. So that alone could act kind of like a magnet to bring Apple back down to at least around $244 to $245 per share. We can see how significant this support line is versus this resistance line. And this resistance line in purple runs parallel to this support line in yellow. It's basically inside of a big channel. So if this resistance line holds up like it has in the past, I could easily see Apple coming back down and retesting somewhere around 237, maybe even 230. If it hits the support line. Now, if this support line in green actually breaks, then we could see Apple potentially coming all the way back down to around 200 even. Now, there is the potential that if this is a legitimate resistance line here up here in orange, if this resistance line in purple breaks, we could see Apple come all the way up to about 293, 295, maybe even 300 even. But that's a big if. And I've shared it before, but I'm going to share it again. On the weekly RSI, we have this symmetrical triangle pattern, and right now Apple is at the upper resistance line for strength. So could it break out? It could, but it's more likely that at least in the short run, Apple is going to pull back down to the support line on the RSI, which potentially could correspond with around 235 to 237. Looking at Microsoft on the weekly time frame, we still have this massive rising wedge pattern that, if it were to play out, would still be targeting somewhere around 345 to 350. And when we zoom into the daily time frame, we look at the RSI, we see we had the symmetrical triangle, had a bit of a false breakout like we often do, and that would potentially indicate to me that Microsoft is going to play out to the downside rather than the upside. But we can't ignore these nested ascending channels that it's in right now. This channel in blue is the more significant one. So I could see if Microsoft gets down to somewhere around 424 to 425, that potentially could be a really good buying opportunity. We have this smaller ascending channel here where we broke support and came down. And we can see this little tiny symmetrical triangle. If it plays out as expected, it's going to take us down to the support level, which could be at least a short-term, really good buying opportunity. And if the channel holds up, we could see it potentially going from about 424 per share all the way up to about 460 per share. Looking at Google, remember this giant symmetrical triangle that we covered before that's still potentially targeting around 222 to 221 per share? which could even be seen as basically hitting the upper resistance line of this long-term ascending channel here. Now, if you notice, we have this ascending channel here in yellow that we've broken into and out of multiple times, so it seems significant. And with this 4-hour symmetrical triangle, it could either be targeting the upper resistance line of that somewhere around 212, or if it breaks support and comes to the downside, it could hit this main support line right around 179 to 180. Then looking at Amazon on the daily time frame, we can see it's still within this pretty well-defined channel. We got the red resistance line and the blue support line here. And it's currently within a shorter-term ascending channel right here that's pretty well-defined. And if you notice this symmetrical triangle here as well, it's targeting around 243 to the upside, or roughly about 206 to 207 to the downside. And as symmetrical triangles often do, I could actually see a scenario where it has a false break right around 220 and then blasts up to around 235 to 240. And again, it always depends on where it breaks out from. And you have to remember that pattern targets move. So if we did have a false breakdown to around 220, you would take your pattern target and drag it down there. And that's where we get our target of around 235. And I'm not covering it in this video, but if you're interested in my analysis on Bitcoin, check out my previous video that I'm linking right now. And there's a very big possibility that the Bitcoin cycle is contracting. And we actually may already be near the local top. On social and on the community tab, I shared these rising wedges that appear to be going right up into these key resistance levels right here, as well as the falling wedge that was also forming on the VIX as added confluence. So congratulations to anybody that caught this move with puts. I was calling it for at least a 10-point move down, and we got that. So on Friday, I was also potentially looking for bullish setups, and we got this. We had a falling wedge on the 5-minute time frame that was falling right into 4-hour support on the Ichimoku cloud, which you can see right here. We got right down into the lower portion of the cloud, and that acted as support just like we would expect it to. But what's interesting to me is that SPY could not hit this falling wedge target of around 596, and QQQ couldn't hit its target of around 524.50, showing that the bulls, at least on Friday, were not as strong as they have been previously in the year. And for all the traders that love Fibonacci levels, when we take a measured move from the breakdown of that rising wedge down to the bottom, we can see that the biggest retracement we could get was just below the 50% retracement. We couldn't even get up to the 61.8, which is not an overly bullish sign. And when we look at the weekly RSI, we can even see we have this ascending triangle I've been covering. We came down and we hit the lower support line here, and strength bounced a little bit. But I really do have to wonder, is this just going to be a dead cat bounce, or are we going to head back up higher? Switching over to SPX, we can see that this cup and handle pattern target of around 5,800 was already met, and now we have the symmetrical triangle pattern with a target of around 6,180, give or take. And let's just say 6,200 to make it even. I genuinely have to wonder if this is the final run of the bull market for this moment in time, and once we hit that pattern target, if the giant rising wedge pattern that I've been covering all year finally plays out. If it does, it would be targeting roughly 54.20, give or take, which would be about a 12 to 13% drop depending on momentum. If we got enough momentum to the downside, this could continue even further. But that roughly 12% drop would be the pattern minimum. There have been so many times when I've seen patterns meet their target despite all odds when it didn't even make sense. So on SPY, we could see SPY hitting around 621, which is the symmetrical triangle pattern there for that, and then breaking down to around 545, which is a key level right here. We zoom out just a little bit. You can see how price got up here before, treated it as support again. We broke it. We had a big waterfall event back in August. When we got back above it, it acted as support again. So this is a key level and could be potentially an amazing buying opportunity if the market does get down there. And I can't help but noticing a parallel between the current price action and back in July leading into August 5th. Back in August, we had some sharp moves down. We tried to get back up. We couldn't break that previous high, and then we had a waterfall event. Right now, the market is at an even higher valuation than it was before, and it has recently touched this main, and I mean main, red resistance line. And we've got to zoom all the way out to the weekly time frame to even see what I'm talking about. Every single time that the market has hit that red line, we've had a deep correction. By no means am I saying go all in on puts, but I am saying that the risk is potentially there and you may want to hedge your portfolio. Not financial advice, but that's what I'm doing. Now, I'll tell you what really bugs me about missing the drop on Friday is that I called it out. I called out that rising wedge on SPY, the falling wedge on the VIX, and Dixie did exactly what I thought it was going to do. It came down, it hit the baseline of the Ichimoku cloud on the 4-hour time frame, and it had just a little bit of the bounce. But what I was looking for is for it to actually touch the cloud and then have a sharp move back up, which is exactly what it did, and it's what led to the sell-off on Friday. But if I zoom out a little bit on the 4-hour time frame, see what we've got. We have hidden bullish divergence. The RSI made a lower low, whereas price right here made a slightly higher low. And the majority of the time when I see this, especially on the 4-hour time frame, is we get a bounce, possibly a multi-day bounce, followed by further continuation to the downside. So there is the possibility that Dixie is about to break support on the 4-hour time frame. A sharply moving Dixie in either direction is likely going to affect the markets, and if it goes down, the 10-year yields are also likely to fall. But the opposite is obviously going to be true if Dixie decides to keep pumping. And there can be shorter-term retracements, but I'm absolutely not forgetting this massive falling wedge pattern that I've shared before. If this plays out, Dixie could still be headed to around 112, pushing it right into this main supply zone. And if it does, and if the 10-year yields continue to rise along with it, it's going to put major headwinds on the markets and economies around the world. Looking at the ADD, the market breadth indicator, that is my favorite one to use, we saw this rising wedge pattern that was adding confluence to everything else before it happened on Friday. Now look what we've got right now. We have a descending channel here in orange. Now on Friday, we hit the lower support line of that, so we would expect a bounce. But if this continues, and I will say this is the first time in over 2 years that I've been trading that I've seen a descending channel like this form on the ADD, this potentially could be indicating that if we don't break out of it, it could be taking the market into extremely oversold conditions. Alternatively, another way to interpret this would be that this is a bull flag and that the market, once it gets low enough, is about to blast off. It really all depends on whether or not resistance holds as resistance and if support holds as support. Nothing is sure in trading. That's why we figure out what our probabilities are and we base our trades off of that. We can even look at the VIX on the 1-hour time frame. We saw this falling wedge. Depending on where you actually got your pattern target from, where you measured from, whether it's from here or if you measured from the beginning here, we had a pattern target of somewhere around 18 to 20. Now it looks like the 18 target got hit, so that seems like it's more likely the accurate measurement. But there is also the possibility that we're going to continue to head higher. But the VIX definitely met heavy resistance on the 1-hour time frame here. You can even see it on the Ichimoku cloud. And it even hit the 100 period moving average there. We're getting into a requested ticker, NIO, but before we do, if you're getting value out of this video, please like and share with somebody that could benefit from it. So looking at NIO on the weekly time frame, we can see we have these 2 descending channels, one of which appeared to be the dominant channel before. We can see how we have multiple touch points here, and we've even also got some touch points down here, but there's also this twin parallel where we got support touching multiple times here, here, and here. But we also got resistance touching here and here. And so this looks to be kind of a similar setup to MVIS, which I'm also going to be getting into. This stock is definitely on a bearish trend. In general, it's just heading down. But we have these bullish breakouts in between where we basically get short squeezes. And it looks like that's what happened here. Price hit this demand zone and shot back up, but then hit this main resistance line. So could it head higher? Potentially. I could see a potential where it comes down and hits demand again around $4 even, and then pushes higher, potentially breaking this resistance line here around $6. And if it does, it could come back up and hit demand around $7 to $7.50. And Microvision is absolutely still on my radar. And if this giant falling wedge still plays out, the pattern target for that is still around 250 per share. And right now I'm holding some call contracts that are dated a few months out to see if this plays out. If we got enough momentum and we hit that pattern target, we might even see it come up to around $3 a share before hitting this main resistance line. Exxon Mobil is also still on my radar. Right now we've got this demand zone that goes all the way from about $96 a share all the way up to about $107 a share. We see that for the week, Exxon Mobil got below this main support line, which left me pretty uneasy, but then pushed back up. But there's obviously a lot of resistance in this area from around 106.60 up to around 108. So what I've actually done now, and again, this is not financial advice, but I've structured a trade in such a way that if this is considered like a rising wedge or potentially an ascending triangle, if this breaks support and comes to the downside, it would be targeting roughly around $70-something a share. Or if it goes to the upside, it could be going up to about $160 a share. I'm basically playing the range between the support and the resistance line, somewhere around 125 to 126, down to around 106 to 107. But I have a long dated put and call so that if it breaks out majorly in either direction, I'm going to profit. I'm about to share this week's trading rule to live by, but I wanted to mention that I also went over Intel in my last video. So if you're interested, please click the link that's appearing right now. And I put a lot of time and effort into the analysis and making these videos, and I would love to have at least 1,000 subscribers by my next birthday in April. So if you could help me out with that, I would really appreciate it. Best of luck, cool cats. God bless. And here's this week's trading rule to live by.